Get a check on the latest world and national news with Leslie Lotto in the Bloomberg 1130 newsroom in New York. Hey, Leslie.
Thanks, Carolyn Madison. U.S. officials say the search has ended for remnants of the Chinese balloon downed over the United States. They have confirmed the recovered debris backs the view that it was indeed used for spying. Yesterday, the president spoke about the downing of 4 objects the last several weeks, saying the last 3 that were downed by the U.S. were not linked to a Chinese spy program. French President Emmanuel Macron has presented Ukrainian President Vladimir Zelensky with the Legion of Honor during Zelensky's visit this week.
Ukraine and main France avec
Macron once again pledging his country's support to Ukraine in the fight against Russia's war of aggression. Yesterday, Russian rained missiles down onto Ukraine as U.S. officials asked Zelensky to wait to retaliate. Vice President Kamala Harris also in Paris. She attended the 2023 Munich Security Conference and here greeted the French president.
And talk about, as a priority, our commitment as a partner to the people of Ukraine and many other issues is part of our continuing conversation that is the testament to the friendship.
And the EPA administrator in Palestine, Ohio, the scene of that trail derailment, Michael Regan saw where the impact happened firsthand near the border of Pennsylvania.
We will be there until this job is done. And I have to say, we will hold Norfolk Southern accountable. EPA will use its full oversight and enforcement authority. We are with the people, and we want the community to know that.
Derailment of almost 50 cars happened about 2 weeks ago. Carolyn Madison, back to you.
All right, thank you so much, Leslie. You are listening and watching Bloomberg Business Week, brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. If your business was hurt by COVID, it may qualify for a payroll tax refund. Even if you took PPP, your business may still be able to claim the employee retention credit. See if your business qualifies for ERC assistance at getrefunds.com.
And as we know, February is Black History Month, and every day this month, we are celebrating significant moments in U.S. Black history. So with your installment for today, Friday, February 17th, here is Bloomberg's Justin Milliner. Hey, Justin.
Hey, Maddie, thank you. On this day in Black history, in 1963, the man many consider to be the greatest basketball player of all time, Michael Jordan, was born. His career in basketball, of course, is legendary. He was drafted by the Chicago Bulls in 1984. Went on to lead them to 6 NBA championships. He was selected to 14 All-Star games, won 2 slam dunk contests, won the league's MVP award 5 times, and was inducted into the Naismith Basketball Hall of Fame in 2009. Now, that's on the court. Off the court, he's a cultural icon. Through his marketing and endorsement deals, he was able to open up a new world of possibilities for pro athletes. Think about this. It's been about 2 decades since he last played basketball. With his line of shoes, Air Jordans, they remain one of the most popular sneakers globally, and it's an entire line of athletic wear and sneakers under the Nike umbrella. Now, many current players have their own unique endorsements and marketing deals, earning them millions off the court and paving the way for them to have success after their playing days are over. And there's a new movie coming out, Carol.
I was just looking at it, Air. I saw a trailer on it. I mean, it's Ben Affleck.
Yeah.
It's Matt Damon. Affleck is Nike founder Phil Knight, right?
Yes, he is. And no, actually, Matt Damon's going to be Sonny Vaccaro, the guy who's trying to sign Michael to his deal.
Right, but Ben Affleck.
Oh, I'm sorry, Ben Affleck.
Knight.
Oh, beg your pardon. Sorry,
know,
Carol.
it's a
Yeah.
lot of
Ben Affleck. He's directing it, too. So
I am looking forward to that. That looks like a really good
it does
fight.
look really good.
Yeah, it definitely changed the game when it came to
100%.
athletes and brands, right? Definitely a game changer. Justin, thank you so much.
Thank you, Carol.
Justin Milliner there. And, of course, we're going to head over to our TV team, talk about the markets. Countdown to the close starts now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left to go in the trading session. Romaine Bostic here alongside Shanali Basic. We're joined right now by our colleagues Carol Masser and Madison Mills. Welcome to our audiences across Bloomberg Television, radio, as well as for those folks streaming on YouTube. Carol Masser, a market really adjusting, I think, to the idea that inflation is going to stick around a little longer, and more importantly, the Fed is going to stick around a little longer as well.
Yeah, I feel like the Fed got together and they're like, all right, guys, we've got to hammer it down to investors because we've definitely seen it play out, certainly in the Treasury trade. Although interesting to see equities kind of moving up here in the last hour of trading. Having said that, one thing and one sector, despite the high-tech world that we live in, check out the farming economy thanks to Deere today, because this stock is definitely a standout in today's performance. You should see, let's see, for those who are on YouTube and Bloomberg Originals, you can see that Deere is up about 7.5%. We did have the company come out. It's top of the S&P 500, by the way. Reported first quarter results beat expectations. They raised their forecast. So big move there. You also had AGCO. It is up about 2.5% in today's session. And then you have CNH Industrial. They're based in the UK. Their ADRs trade here in the US. They too are up about 2.5%. So really investors moving into this sector, Maddie.
Well, we know that the Fed is going to be looking at the health of the consumer when sussing out their decisions on rate hikes. And we've got some credit data that's not looking good for the consumer, particularly young folks. The Fed, New York Fed, released yesterday this credit delinquency data showing us this rise in delinquencies, particularly among those aged 18 to 29. Really interesting, especially that this comes as those student loan repayments are paused until August of this year. So wondering if this is the canary in the coal mine, Shanali, and this is coming again as credit card balances are nearing $1 trillion.
All right, well, taking a look, going back to the broader market here, the S&P is slightly lower on the day, only by about 0.3% here, but it's still heading for what is going to be back-to-back weekly losses, the first back-to-back weekly loss that we're going to have this year alone. We should point out, though, that if you are looking for a bright spot, the NASDAQ is clinging to a weekly gain, though it is down on the day by about 0.6%. Similar story for the Russell 2000. The Russell higher by about 0.2% on the day, and actually setting up for what is actually going to be a pretty substantial gain on a weekly basis, Shanali.
Wow, over the optimist over there, Romaine. So we're looking also here at the sectors in the S&P because it's not as optimistic. You have more sectors down than not. What is in the green, though, is consumer staples. That is something where there's been a lot of uncertainty around it. You're up about 1.2% or so. Utilities, healthcare also up on the day, but energy down more than 3% on the day. Information technology also down more than 1%. All
right. Well, some of the other individual movers you just were talking about, Deere there, Carol, headed for a second straight weekly gain here, up 8% here on the day. Keep an eye on Akamai. It's actually higher on the day by about 0.3%, but at one point in the day, it did actually hit a fresh 52-week low. It's still trading about the lowest levels we've seen going back to 2019. A lot of concerns here about rising costs with regards to cloud computing. The stock down about 15% on the week. Devon Energy, actually one of the biggest decliners in the S&P on the weekly basis. It's down 4.5% here on the day. And turn your attention real quick to AMC Networks. This is, of course, the TV company, not the movie theater company, having its best day on record, I believe, up about 33% right now. Some of this appears to be tied to some comments from James Dolan about being open to M&A. All right, you talk about what's been going on with regards to, I guess, the broader market here and the idea of the rate expectations and some concerns here by Bank of America, Michael Hartnett, the idea here of this sort of bear market trap, the idea here that as we sort of talk about the resilient economy and maybe push back the idea of when we do get a recession, well, it also means, well, that maybe that takes out of the equation, guys, this idea of a soft landing or no landing. The idea a hard landing is still there. It just may be a little bit further off into the future.
Yeah, and it feels like maybe Larry Summers, former U.S. Treasury Secretary, maybe got some wind of that. He caught up with our David Weston earlier. You know, he is looking at that continued inflationary pressure that we continue to see in some of the economic reports, certainly that we got out this week. He is thinking, what happens, though, if we end up having a Fed that does a lot more than previously thought? Here's what he had to say.
The risk is that we're going to hit the brakes very, very hard. And then when we hit the brakes very, very hard, that's going to kick in at the same time that some of those negative cyclical dynamics about rising savings and excess inventory and so forth are kicking in.
All right, former U.S. Treasury Secretary Larry Summers catching up with David West. You can catch more later on. But his whole idea is like all of a sudden kind of a pig pile, and what does that do for the economy ultimately?
But this is sort of now the big debate, because you have people on I think, Larry Summers' side. They're basically saying the lagged effects, et cetera, et cetera. The idea if the Fed keeps sort of pumping, they're going to sort of overcorrect. But then there's this idea, and I think he gets to it in Michael Hartnett's note, the idea, and I'm just going to quote him specifically, he says that the fight against inflation is very much unaccomplished. So the question is, what's the Fed to do here? if they keep their foot on that brake, as Larry Summers will use his analogy here, maybe they get to that mission accomplished, but at what price?
Yeah, exactly. I mean, if they end up being more aggressive, again, because they're a little concerned about certainly the economic reports we got this week and concerned about inflation once again starting to tick higher, do they be more aggressive and then there is an impact in terms of the economic slowdown? But something I've been thinking about, does the Fed need to kind of continue to be a little bit more aggressive, and then that opens the door for them to start cutting rates
Maddie, has she really been thinking about this, or is she just...
No, but I mean, this whole idea that they then have more ammunition to ultimately cut rates later on if they need to.
Well, and we were talking about this earlier with Creedy, the idea that we might be seeing some red today, but is that really that bad? Are we really seeing the stock market pricing in 50 basis points, or is there just low volume because we're heading into a 3-day weekend, right? It could be some bad-ish news today, but not long-term, right, Shonali?
We have a 3-day weekend?
Yeah, thank God. It's about time. But, back to that Fed conversation, really, that PPI data is what really threw traders over the edge yesterday, let alone...
Carol only works 4 days a week anyway.
Yeah, do you?
Just feels like 10.
I like to sail. I didn't know you did it in the middle of the week.
All I'm going to say is March 22nd. That's when we're going to know exactly how the Fed thinks, what they're going to do. They're going to give us their projections. Up until now, it's a lot of speculation. Think about how many times, depending on the trade, we go back and forth in terms of the themes and the conversation. We really won't know until we get to that next March meeting.
We won't know till March, but what's more concerning there is that chart we showed earlier, that increase in expectations, both from the market and the Fed itself, and all the commentary we heard this week from official after official signaling higher for longer.
Signaling higher for longer, but I got to look ahead also to next week's earnings. I'm really excited about this because we're going to get a lot of consumer data. We've got Home Depot, Walmart. I know we don't always pay much attention to the consumer discretionary shares, but this could be really telling when we look at how the consumer is handling some of these inflationary pressures that we talk about, Carol.
Romaine, when he takes off his bow tie, is a big Home Depot dude.
Oh, I believe it.
Aren't you?
I'm very handy.
You mean he can wear his bow tie there?
I have no doubt.
It's right around the corner.
Don't judge a book by its cover.
I'm not. I'm saying you are very handy.
If you need a new deck, I'm your guy.
All right, I might just sign you up. I might just sign you up.
Don't worry,
guys.
I'll only charge you about a 20% premium.
Well, inflation. All right, we'll be back in less than an hour's time. Our cross-platform coverage, radio, TV, YouTube, and of course, Bloomberg Originals. We're going to count you down, wrap up the trading day, wrap up the week ahead of that long weekend. Beyond the Bell at 4 p.m. Wall Street time. All right, we're going to talk about tractors. Yeah, I guess they could be sexy. I don't know. Down on the farm, everybody. All right, cheers of Deere. They are, Romaine and I and the team, we were just talking about this. Deere jumping today, certainly one of, I think it's the #1 gainer in the S&P 500. Reported first quarter results, beat expectations. They raised their forecast. Let's get into what is going on at the company, maybe what it says more broadly about the farm economy and the world at large. With us is Bloomberg News ag reporter Elizabeth Elkin. She's joining us via Zoom in New York City. And we've got Bloomberg Opinion Deals and Industrials columnist Brooke Sutherland right here in our Bloomberg Interactive Brokers studio. Hey, Elizabeth, I want to start with you. Break down the quarter for us.
Yeah, absolutely. So like you said, we had a really, really, really strong day for Deere today. You can kind of see how well farmers are doing based on how well Deere is doing, right? So farmers are making a lot of money, which means that they're buying a lot of tractors. And so then you get Deere making a lot of money off that, right? There are a lot of farmers who are going in and they're upgrading their fleets. They need new equipment just like anyone else does. And they're upgrading and they're spending a lot of money, and Deere is making money off that, of course.
So, Brooke, bringing you into the conversation here, tell me a little bit about what this is looking like on the deals side. What are people most excited about when it comes to Deere?
Sure. I mean, on the deal side, I think in the industrial world, it's just interesting to see, how these companies might behave if we see some valuation reset. We've heard a lot of companies complaining about prices being very expensive. Certainly, Deere has been making some inroads on the technology front, which, we've seen that across the industrial sector of companies wanting to invest in these higher tech options for their equipment. But I think what's interesting in today's numbers, it just really echoes what we've heard across the manufacturing sector this quarter, that they're not really seeing that dramatic drop-off in demand that people have been worried about for so many quarters. Certainly there's pockets of weakness. For Deere particularly, that's on the more consumer-facing side, some of those sort of hobby tractors that were very big during the pandemic when we were all sitting at home and trying to figure out, really, I mean, people who think tractors are sexy and we're excited to get out and do that during the pandemic. And so we're seeing weakness there. But in terms of their really more industrial-facing businesses, it's just not happening there, and nor is it for a lot of the other industrial companies that I look at.
Brooke, go through some of the headlines and numbers that we got from Deere, though, that was so strong about, they addressed demand, they talked about supply chains. Walk us through it a little bit.
Sure. Like Elizabeth was saying, farmers are doing well right now. Crop prices are up, and there's some expectation that net income for farmers will be down next year relative to this year, but Deere still expects it to be at a very healthy level to support that replacement demand for this aging farm equipment that we've been talking about for years and years now. And they are looking to invest, and Deere has also come out with higher tech offerings that can help improve farmers' productivity, which of course is very appealing at a time when crop prices are high and you want to get as much bang for your buck as you possibly can.
Is part of this, and let me first start with you, then I'll bring you back in, Elizabeth, is part of this the inflation story, that because farmers have they been able to charge higher prices? Is that part of it?
Deere has seen incredible pricing power, and they're not alone in this. But I think it is just notable how much Deere has raised prices, and it's somewhat similar to what we've seen at Caterpillar in terms of pricing power. But these are very big companies with very deep networks of dealers and service providers, and they have a lot of power when it comes to pricing, and they certainly have not hesitated to flex that in this environment.
But is it because farmers are making more money off their crops?
I mean, I think
because
that helps the farmers be able to
Okay.
absorb the higher costs, and at the end of the day, if you need the equipment, you're gonna want to buy it. Of course, there are competitors that you can look to in this field, but like I said, Deere is a big company in the agriculture equipment space, and they have a lot of power.
There's not a lot of choices. Elizabeth, come on in on this and what we've been talking about.
Yeah, absolutely. So commodity crop prices are really, really high, and farmers are, as we've said, making a lot of money off of that. We do, as we've been looking at this year or this past sort of year period, we've been worried somewhat about farmers being able to outpace inflation, right? Because everything that goes into growing crops goes into the farm, processes. We've seen massive inflation on that, but so far crop prices have kept up pace more than so, and so farmers are kind of rolling in cash right now, and that's where we see this come in, right?
So farmers are rolling in cash. I wonder how much of this is the fundamentals versus the technicals for Deere. What is the exact data point that people are most excited about when looking at Deere? And Brooke, I wonder if you can touch on that.
Sure. I mean, I think it's a variety of things. I think there was a lot of angst heading into this quarter, that we might start to see signs of a slowdown. Deere, its stock is up significantly over the last couple of years. And, I think people are wondering if, there's an opportunity for some profit taking at some point here. But the company just keeps outperforming and blowing past expectations.
It's pretty remarkable. I just went back to 2018. I guess that was a little bit of a, 2018 I think was a little bit of a down year, but they have just been shooting up year after year.
They have. And I mean, it's not just the agricultural equipment either. I mean, one of the things that stood out to me, just, looking at the industrial sector more broadly like I do, is their optimism around construction equipment, that, whatever weakness we're seeing in housing, they still are seeing very strong demand for construction and forestry equipment, as some of that institutional commercial spending comes in, benefits from infrastructure spending, that sort of thing. So, that's a focus for a lot of investors in the industrial side.
And I know, Elizabeth, that you cover this in a much more highbrow way, but I do wonder to what extent kind of the memification of Deere and Caterpillar has any impact on the companies. Like when we see everyday consumers just wanting to buy anything branded Deere to kind of express their own love of the company, does that stay sticky? Does that remain a good sign for the company when you look, a year from now, 5 years from now?
I mean, look, Deere is one of these top names, right? I mean, I don't think that I can think about driving through. I went to school in Alabama. I can't think about driving through Alabama without seeing a bunch of big green Deere tractors, right? I think
And the hats.
You know,
Do you
and
know
the
they
hats,
make children's
and that
books
doesn't go
too?
away.
They have so much that you can buy to just be like, I love this brand. And they've done so much marketing around that. And I just wonder, I know that's a low expense, but I wonder if that has an impact on the health of the company.
I think it's a great thought. I mean, the branding is obviously really, really important to a company like this. And, you know, like you said, even like the hats and things, like those are things that I don't drive tractors, right? But I could still buy a bunch of like deer, you know, hats and shirts and things and like be like, yeah, I love big green tractors, you know, all of those country songs. Like I can still do that. So I would imagine that that is helpful for these companies, right?
I would also think that the brand power helps and plays a role in the pricing factor too.
Yeah.
You know, it's a well-known brand that people think of, and that gives them a lot of power.
You know, I'm looking at Deere. So 2018, go back to the end of 2018, it's up at almost 200%. I mean, it's really just been on a tear. So guys, we just have about a minute and a half left here. Brooke, let me start with you. So when you look at the industrial space more broadly, we've had reports, you've got Deere. What does it tell you about what's going on more broadly in the economy? I mean, as you say, these are not inexpensive machines.
No, they're not. But I mean, I think one of my biggest takeaways this earnings season has been CEOs' willingness to not only hold steady capital expenditures, but step them up. I mean, I think you have to feel like they're taking a pretty confident view of the economy here to be making these spending decisions that, you know, there might be some sort of soft dip, a soft landing, short-term dip, but they're looking past that and thinking about the long-term future of their companies and seeing a very robust demand backdrop, whether that's from reshoring or infrastructure or other stimulus programs in the U.S. and in Europe or China, and they feel good.
Elizabeth, come on in for a final thought here. Just got about 30, 40 seconds here, because I always think about, people think about farmers always needing subsidies, and it's such a tough industry. What does it say more broadly to you about what's going on in ag? And again, got about 30 seconds here.
Absolutely, yeah. I mean, it is a tough industry, but at the same time, like you see huge commodity farmers like really making money. That being said, you also see some of the smaller farmers really struggling, and I think that you can see that in some of these equipment sales numbers. Small ag in the U.S. is looking down for the year, and I think that that's sort of telling of some of the smaller scale farmers rather than these big commodity farmers that we talk about a lot.
Well, the Deere numbers, stock's still up about 7.3%. We saw AGCO going up, and we saw other names in the space definitely trending higher. Thank you both. Really appreciate it. Bloomberg News agriculture reporter Elizabeth Elkin joining us via Zoom in New York City, and of course, Bloomberg Opinion Deals and Industrials columnist Brooke Sutherland here in our Bloomberg Interactive Broker Studio. Who knew? Deere books for kids. They play noises even better. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We check the markets all day long on Bloomberg, and this update is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. Your small to medium-sized business could be missing out on an opportunity to claim the Employee Retention Credit. Innovation Refunds has helped thousands of small and medium-sized businesses claim over $3 billion in ERC refunds and may be able to help yours too. Learn more at getrefunds.com. Now, let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks off their session lows with a late day bid. The Dow's currently up 100 points. S&P's paring losses to 14, and NASDAQ is still down by 82. The U.S. 10-year yield at 3.82%. Gold is higher by 6. Energy is in the red, and Bitcoin is little changed. Of the main 11 S&P sectors, leaders were consumer staples and utilities. Energy was under pressure, and leaders to the upside, the Dow, Amgen, Merck, and J&J, while Salesforce fell 1.9% and led to the downside. After earnings, Deere is up 7%. DoorDash is down 7%. And in deal news, Vince McMahon is asking $9 billion for his wrestling empire. Wrapping things up, KKR-backed BMC, worth up to $15 billion, is set to file for an IPO. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. Have a great long holiday weekend, and to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks, Charlie. Shares of AMAT, Applied Materials, which, as you know, the biggest maker of chip manufacturing equipment, gave a strong sales forecast for the current quarter, signaling that its ability to fill those delayed orders is helping make up for weakening demand. That writes our very own Bloomberg's Ian King.
He does indeed. AMAT, by the way, top seller by pension funds last quarter. That was according to a preliminary 13F analysis by Bloomberg earlier this week. Let's get more, though, on the company and the overall semiconductor industry. You know him well. He's who we go to when we want to know the latest and greatest. Ian is, of course, U.S. semiconductor and networking reporter at Bloomberg News. Ian King on the phone from San Francisco. Ian, so let's talk AMAT. Stock is a little changed here, a little bit lower. It was up earlier in today's session. What stood out for you, according to their report and their call with analysts last night?
Yeah, I think you have to put everything in context, which is, according to what sort of a lot of the company's customers have been saying, things are really bad. We have this giant amount of inventory. We need to spend less on new production technology. So that should translate into a downtick in orders and the fortunes of Applied Materials. What the company came out and said was, actually, no, you guys are kind of missing it. If you look at the market, not all segments are equal. Not all areas are in this horrible glut situation. There's still a lot of demand out there for the types of chips that go into automobiles and industrial use. And we're providing a lot of those machines, and so we're doing okay.
How much of their business, Ian, is the auto industry and that kind of stuff?
Yeah, I mean, it's difficult to say because what they do is they sell into what are called foundries, companies like TSMC, Global Foundries, and those companies then apportion up their production according to what the demand is there. So there isn't a clear sort of ability to pass it for Applied Materials there.
So, Ian, talk to me a little bit about, all week, I feel like we've been talking about these breaches. Applied Materials didn't name the company that it's worried about, but they kind of danced around a breach during the earnings call. Can you tell us a little bit about that?
Yeah, I mean, it's a pretty horrible situation. A company called MKS, which supplies vacuum tube technology for a lot of the chip equipment industry and a lot of chip makers. This company cancelled its earnings report and has shut down its website and basically said, look, we just can't, we're being held to ransom here. We can't supply anybody. And that company is a key supplier of Applied Materials, costing Applied Materials $250 million in lost revenue in this quarter. Obviously a horrible situation. We're waiting to see whether that has broader effects on other companies as well.
That is unbelievable, right? Like, we all go about our business and these companies are doing their thing, and then something like that happens. As you said, maybe more to be known. When you look at the flow of news that's been coming out, Ian, when it comes to the semiconductor space, I feel like there's been a fair amount. Of course, everybody's been, nuts because of AI and looking at things like NVIDIA. But tell me how the industry seems to be doing at this point, kind of where we are in the cycle.
Yeah, I mean, you mentioned NVIDIA. That's the perfect case. I mean, NVIDIA's fundamental business, the business that it depends upon, which is the PC industry and gaming PCs in particular, is in a historic slump. It's in a disastrous situation, and yet NVIDIA's stock is up 50% this year, right? It's the most valuable chip company in the world. Again, why is that the case? Because we need these chips to run all of these AI workloads, and guess what? The public's just become massively aware of the importance of this again. So you've got sort of expectation definitely outrunning the fundamentals, but we'll find out next week when NVIDIA report just how far ahead we are, whether that demand for AI processing is actually really helping them out in what is a really tough end market for them.
Yeah, I was just going to pull up NVIDIA right now. Yeah, it's up almost 47% this year. Hey, you mentioned PC demand, because we also had the story that Lenovo came out, their profit down for the first time in almost 3 years, and they talked, obviously, about waning demand for personal computers. That's what they do, and they, were warning of some job cuts ahead. When you see a story like that, what do you think about in terms of the space that you cover, the semiconductors, what that means? Just more of the same thing, or something maybe even more dire?
I mean, that's absolutely the heart of the matter there. I mean, I think investors are punishing some of these companies, obviously, for the numbers, but they're also punishing them for what a lot of the executives said, which were like, hey, this isn't just a pandemic bounce. PCs are important. Again, we need these things. There's going to be, the market's back up to historical levels. And what we found out was, no, it was really a pandemic bounce, and we're back below that level right now. The only remaining question is sort of whether we are going to get through this inventory period and things are going to settle back at a slightly higher level, or whether really, the era of the PC is sort of over in terms of, it being that important device. So those are the dynamics going on there.
Here's a stat for you. PC shipments worldwide plunged 28% last quarter to 2018 levels. That's from IDC. So, as you say, Ian, I know this is something you're familiar with, but just some perspective.
Absolutely. And I know Applied Materials benefiting sort of from backlog orders and the ability to kind of fill some of those with better access to some more components. Ian, I wonder if you can talk about what those backlogs might do for AMAT moving into the next couple of quarters we've got this year. What are we thinking the staying power is for those backlogs in terms of the impact on the company?
Yeah, I mean, that's exactly the question that their management got asked in about 300 different ways on their conference call yesterday. And their answer is yes, backlog is going to go down and return to normal levels. We can't expect it to continue to expand, which it did in the first quarter. So obviously there's still some supply chain disruptions that need to be worked out, but that's going away. And then as the year progresses, we'll get a sense of where fundamental demand is. The big hope that chip makers and Applied Materials have put out there is that the sell-offs and the inventory correction has been so steep that normal levels need to reassert themselves, and normal levels should be higher than they are right now. The naysayers would say, actually, no, this is a recession, this is bad, and these levels are going to stay low for a while until we see consumers and companies out there spending on their tech again.
And when you mentioned the chip industry, I know it's been in this slump. What's the optimism looking like for the next year ahead?
Yeah, I mean, it really depends on who you talk to and frankly, how desperate some of them are. I mean, companies like Intel are going through a really, really rough approach, and they're out there sort of pleading with investors to sort of believe them that this is the absolute nadir, this is the worst point of things, and things will get better in the second half. Other companies are saying, look, like Texas Instruments, they're saying, look, it's rough. You should have seen this one coming. There are a lot of negative factors that we need to work through. We'll see what happens. And so it depends on whether you believe the rose-tinted spectacle view or whether, you're going to take a more sober view like TI has, which is, it's not great.
Hey, listen, one last thing before you go, before we go. We've just got about a minute, Ian. I don't know if you saw the story that was on the Bloomberg that basically talked about the UK kind of working out, I guess, disaster scenarios, if you will. And one that they talked about was a Chinese, basically, I guess, invasion or takeover of Taiwan, shutting off the chip supplier TSMC, which, as we know, supplies so many chips, right, to the world. Is that still a concern, the chip war? I mean, it was something I felt like we were talking about for such a long time. Feels like it dimmed a little bit. 30 seconds, still an issue.
100% still an issue, 100% that as we squeeze China more and more, which we're doing with export controls, that China looks at this situation as though it has little to gain from negotiating and perhaps looks at other options. That is definitely a concern.
All right, going to leave it there. Thank you so much, Ian. Covering a lot of ground. Ian King, U.S. semiconductor and networking reporter here at Bloomberg News, on the phone from San Francisco. Highly recommend. Check it out at Bloomberg.com or on the Bloomberg terminal. February 16th, Ian and Debbie Wu putting out a quick take about why making computer chips has become a new arms race. It's something that we talk about a lot. I feel like occasionally it dims, but it's chips in everything. And we know with these increased tensions between the U.S. and China, it's certainly something of concern.
It's critical. And AMAT is doing okay on the month, but a little bit lower today.
All right, right now, let's get another check on world and national news. Off to Leslie Lotto we go. She's in our Bloomberg 1130 newsroom here in New York City. Hi, Leslie.
Thanks so much, you too. After lawyers for the 5 former Memphis police officers accused in the beating death of Tyree Nichols last month entered not guilty pleas for their clients earlier today, the family of Tyree and attorney Ben Crump spoke out. Here's Tyree's mother, Rao Vaughn Wells.
I want each and every one of those police officers to be able to look me in the face. They haven't done that yet. They couldn't even do that today. They didn't even have the courage to look at me in my face after what they did to my son.
To Darius Bean, Demetrius Haley, Emmett Martin III, Desmond Mills Jr., and Justin Smith, all terminated by the Memphis Police Department January 21st. Congresswoman Angie Craig has released audio of threats to her, saying they came after she was attacked last week in the elevator of her D.C. apartment. The House member from Minnesota blames gutter politics and called out Fox News host Jeanine Pirro and House Republican officials who she says distorted her record on police funding since the attack. The calls received contained lewd and graphic suggestions that she had deserved to be attacked. Never mind the well-publicized delays and cancellations. Airlines are doing terrific business, as we hear from Bloomberg's Irv Chapman.
Tickets cost more, and more people are paying for upgrades. Helene Becker, airline analyst at the firm Cowen, said in a Bloomberg interview.
Demand is very, very strong. Supply is limited. Not only airframe delays from Boeing and Airbus, but you have engine delays. You have parts that were turning around in 48 hours or taking weeks now. And you have very strong pricing, and fuel costs have come off their highs.
Becker added that the number of pilots in training is far less than the number reaching retirement age. In Washington, Irv Chapman, Bloomberg Radio.
In New York, Leslie Lotto, Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:41 on Wall Street. I'm Charlie Pellet. We check the markets all day long at Bloomberg. The Dow higher, S&P, NASDAQ, they are both lower. NASDAQ 100 index down now by 0.8%. The Russell 2000 up by 0.2%. So here's where we stand with just about 20 minutes to go. The S&P down 15, drop right now of 0.4%. The Dow up 103, a gain of 0.3%. NASDAQ Composite Index down 87, a drop there of 0.7%. The 10-year yield at 3.82% with the 2-year 4.62%. Spot gold up 0.3%, $18.42 the ounce, while West Texas Intermediate crude oil is down 2.8%, $76.29 a barrel. Former Treasury Secretary Larry Summers says a broadening in U.S. price pressures shows that the Fed's monetary tightening to date is having a limited impact, raising the danger of policymakers having to do more than previously envisioned. And he spoke with David Weston on Bloomberg Wall Street Week.
The Fed's been trying to put the brakes on, and it doesn't look like the brakes are getting much traction. And when your brakes don't get much traction, two things happen. You can be moving too fast, that's the inflation pressure, and you can be setting yourself up for some kind of collision or crash down the road.
And to hear the full interview with Larry Summers, tune in to Bloomberg Wall Street Week, 6 o'clock Wall Street time, right here on Bloomberg Radio. AMC Network's Executive Chairman James Dolan says he's open to a strategic transaction. Shares of AMC Networks are surging today, now by 32%. And Norfolk Southern says it drew $100 million on a credit line following that trail derailment and fiery crash in Ohio earlier this month. Norfolk Southern shares down by 1%. And that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week, brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. In about 8 minutes, you can find out if your business qualifies for Employee Retention Credit Assistance. Innovation Refunds has helped thousands of small to medium-sized businesses claim the ERC and may be able to help yours too. Time is running out to claim the ERC, so get started today. Learn more at getrefunds.com.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, we just heard from Charlie, of course, breaking down the trade here. Keep in mind, we are on track for the S&P to see its first back-to-back weekly declines, the first time that we've seen that here in 2023. A standout, though, is those small caps up about 1.5% for the week overall, and a little bit higher, certainly, in today's trade. So let's talk about the markets.
Let's talk about it with someone who knows it very well. We've got Alan Zafran, founding partner and co-CEO at IEQ Capital. He is joining Carol and myself on Zoom from Northern California. Alan, great to speak with you here. I'm going to start with the million-dollar question on all of our minds. What's the outlook for recession in 2023? Can you read the tea leaves for us?
Madison and Carol, thanks for having me. The tea leaves are not terribly encouraging, other than to say if we're going to have a recession, the appearances are that it will be relatively shallow but extended. And I think the challenge is being seen in the way the market's playing out right now. It is a strange time, Madison, and the reason is the bulls are arguing that we're avoiding a recession. But if you're avoiding a recession, the economy is going to be strong. And if the economy is going to be strong, that means the Fed's going to keep rates up higher and longer, which in turn is going to push down economic activity, and it's going to push down valuations and earnings estimates. And so the market wants to hear that we've already pivoted with the Fed, we've had a soft landing, and it's all steam ahead. The problem is the market isn't yet priced in fully higher rates for a longer period of time and the effect it has on reducing earnings estimates. That is the struggle we're witnessing right now.
Alan, got to say, it feels like chicken and the egg. Like I'm not quite sure, and this is the predicament the Fed finds itself in. And we know Fed policy, not exact, or, it takes a while for these moves to really feel their impact. And so none of this is an exact science. Having said that, we do know, or a lot of conversations have been about inflation, bringing it down. It's harder. Right, the first bunch is easier, but as the time drags on, it's a little bit stickier and trickier. Having said that, the investors that you talk to, are they more optimistic or pessimistic at this point? Because the earnings, they kind of held up.
Out here in the Silicon Valley, people are guarded and concerned, not from the standpoint that it's Armageddon. There's just this feeling that we're in the middle of an elongated, slow grinding cycle that hasn't played out. And it's just going to take more time. And it's aggravating, particularly for those in Silicon Valley that have startup and early stage businesses with short runways of cash before they burn up and need more money. That's the scary part. Other much more well-positioned, solid businesses, predominantly in the S&P 500 index, don't have those near-term cash problems, but they recognize the economy is slowing as the Fed raises rates. And we all know academically, in theory, when the Fed raises the Fed rate, it takes about 12 months for the full impact of each rate hike to fully filter through in the economy. So if you believe that to be the case, the slowdown economically is still going to show up 6 to 12 months from now, not today.
This goes back to, I have to say, Maddie, something that I've been talking about a lot, Ken Rogoff on surveillance this week, and just this whole idea of we don't really know what's going to happen and how this plays out, and this is what makes it so tricky.
And so interestingly, he was the one who was saying we're going to have soft without the landing, like another thing to add to our little wheel of options for where we're heading with this. I want to ask you, Alan, about tech companies, because you are in Silicon Valley and you're talking about the importance of cash. As the era of free money starts to wrap up, how are you thinking about tech companies?
Tech companies still have a fabulous quality in which they're incredibly capital light, high margin businesses with recurring revenue streams, and you get entrenched customers who just can't let go of their software based systems once they grab them. So if you have a really strong franchise and a durable product until a better competitive technology shows up, it's a winner. The challenge is these companies are valued on the basis of long-term cash flows. So those businesses are the most susceptible to rising Fed fund rates because I'm going to use a higher discount rate when I value the present value of those distant cash flows. I do think they're increasingly attractive, but in an era where the Fed is going to keep rates higher for longer, in the short run, they're still subject to some whims of continued valuation pressure, despite how far they've come down. They're compelling long-term opportunities, but you have to be selective and ensure you're in a business that has a long enough cash runway to endure whatever slowdown might show up in the next 6 to 12 months.
I mean, Alan, this is the important conversation, right? And you write about it in your latest research about, this 15-year period of easy money being over, interest rates, structurally elevated amidst the return of inflation. I mean, if we are going to, forgive me, a new norm when it comes to where inflation settles and where rates settle and the Fed funds, I know they're sticking to 2%, but I think a lot can be debated about that. That means it's a whole valuation reset for asset classes, and that's the predicament we find ourselves in. And just got about a minute here.
Don't put all your eggs in one basket. Don't forget, there's a reason to own REITs. There's a reason to own value-based businesses, consumer staples, financials which will do okay when we get back to more upward-sloping yield curve, which is forward-looking, healthcare stocks. So despite being here in Silicon Valley, our clients are well diversified across all sectors because we recognize that eras change, and with it, different valuations are applied and different business models can be durable despite near-term economic conditions.
All right, we're going to leave it on that note. Alan, have a great weekend. Appreciate checking in with you once again. Alan Zaffron, he's founding partner and co-CEO at IEQ Capital, joining us via Zoom in Northern California. Having said that, Maddie, we've got about 10 minutes left in the trading session, and we're just off our highs of the session, still slightly lower on the S&P and the NASDAQ, a little bit higher on the Dow, but it's just kind of one of those trades where I think investors are in a little bit of a wait-and-see mode, and it's a holiday weekend.
Wait and see, and exactly. Maybe they're off for the weekend already, which is why we might be seeing some of that low volume, right?
Yeah, absolutely. All right, you are listening and watching Bloomberg Business Week on this Friday. Carol Massar along with Madison Mills, and this is Bloomberg Radio.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. 3:53 is the time right now on Wall Street. AMC Network's executive chairman James Dolan says he is open to a strategic transaction as his company's shares soar after posting fourth quarter results that beat Wall Street expectations. AMC Networks, that stock up now by 32.4%. AutoNation is expecting prices for new and used cars to decline this year. And with more on that story, here's Bloomberg's Denise Pellegrini.
Charlie, AutoNation is one of the biggest car dealerships in the country, and it pivoted to selling more used cars than new ones during the pandemic as those chip shortages sapped inventory of new cars. But now the new car segment is outperforming at AutoNation as manufacturers crank up volumes and offer more incentives to price-sensitive buyers. Now, AutoNation has been bracing for lower car prices as auto production recovers, and CEO Mike Manley expects a seasonally adjusted annual rate of light vehicle sales to be close to 15 million this year. That would be up from 13.7 million last year, Charlie.
And That's Denise Pellegrini. AutoNation rallying now by 11.5%. JetBlue Airways is preparing for a possible lawsuit from the U.S. Justice Department seeking to block the merger with Spirit Airlines. While antitrust authorities have not yet revealed whether they plan to take action to prevent the deal, JetBlue CEO Robin Hayes told Bloomberg Television the company's legal team is ready to fight back if necessary. And those are some of the company stories we're following. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, getting ready to wrap up the trading day and, of course, the trading week. Having said that, man, this story has been on all of our radar, no pun intended, because we're going to talk about airlines and one specific flight.
Air New Zealand. I'm sure you've heard about it. You've seen it. Passengers were in the air for 16 hours. Okay, one of the longest commercial flights in the world already. Had to do a U-turn over the Pacific, leaving Auckland, New Zealand at 8 p.m., trying to arrive in JFK. JFK was having issues yesterday.
Right, power outages, right?
They had to turn right back around. 16 hours.
That is remarkable. So making a U-turn about halfway into its nearly 9,000-mile journey over the Pacific. It was just south of Hawaii. The turnaround made the jet the top-tracked flight on the site, which monitors aircraft all over the world in real time. So we're talking about, Charlie Pellet always talks about this because he loves to track flights.
Oh, cool.
But kind of amazing, and it makes me wonder, did the passengers know, right? We were kind of trying to find some information
I'm trying to find, if anyone can figure this out and tweet it at Carol and I am trying to find a passenger who's tweeted about this. What do you do in that situation, Carol?
What do you mean?
What would you do if you knew, okay, this flight's going to be an additional 8 hours? And would you want to know? Would you want to know the timeline?
I think I probably would want to know, and I would just order up another drink and let my world know that, things are going to be changed.
Yeah.
Part of me was like, well, why did they turn around? Why didn't they just find another airport in the United States? But they say that what would have happened is that diverting to another U.S. port would have meant, and I'm reading from what the carrier said, would mean that their aircraft would have been on the ground for several days, impacting a number of other scheduled services and customers. So it would have impacted a lot of other flights and customers.
It's reminding me of the Southwest Airlines debacle that we had over Christmas. Some of these airlines, it's very challenging. If one flight gets messed up of the system, then it messes up all these other ones. So bad news for these passengers, but maybe their issue saved some other passengers.
That's a really good point. And it's the whole idea, right? The plane gets somewhere, it's going to pick up another flight, but if things get off track, the whole system gets messed up, and a real dominoes effect when it comes to flights. Anyway, glad it wasn't me, glad it wasn't you. Sorry for everybody who was stuck. Hope they had some good drinks and some good movies. Yes. All right, just a few minutes left in the trading session. We're going to count you down to the closing bell. Beyond the Bell with our TV colleagues starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Sonali Bostic here, counting you down to the closing bell, here to help take us beyond the bell. It's a global simulcast. We're joined right now by Carol Masser and Madison Mills. Welcome to our audiences across Bloomberg Television, Radio, as well as Bloomberg Originals, and those folks who are still streaming on YouTube. Carol,
yes,
off the lows of the day.
Yeah.
You happy? You're excited?
I'm happy because
you're loud. Are you going home?
Got about an hour, and then we get a long weekend. No, what I'm really impressed.
3-day weekend you keep talking about.
I know. I like 3-day weekends. 4-day work week. Anybody listening? Anyway, you've been talking.
It's President's Day on Monday. You're supposed to celebrate.
I like my presidents.
Our presidents.
I mean, I like
All
our
of them.
presidents.
I love how we just have a generic holiday for presidents. That way you can't have any sort of political infighting, right? Because it celebrates
It's like
them
when they have a group birthday. I want my own day. What I think is interesting, you talked a lot about the small caps earlier. I mean, the S&P 500 on track for another down week, 2 in a row here. First that we'd see that in 2023. But small caps, right? Maddie, Romaine talked about this earlier, continuing to see some outperformance.
Yeah, look at the Russell 2000 on the day. I want to say it's up by 2%, on the day?
0.2%.
0.2%, rather. Yes. Thank you for that, Carol. But really interesting to see, though. We just had a guest on Bloomberg Business Week Radio who said, don't put all of your eggs in one basket. Make sure you're still diversifying, Shanali. So interesting to monitor all of these moves today.
Before we get to the closing bells, I just do want to give us an update here on that outage that we have been seeing at John F. Kennedy Airport here in New York City. The Port Authority is now saying that they do plan to reopen with limited operations at JFK Terminal 1 on Saturday, so tomorrow. Remember, so far we've had about 39 flights canceled on this Friday afternoon as a result of that electrical outage from yesterday here. Again, this is the International Terminal, Terminal 1 at JFK in New York City. All right, let's get right to the closing bells here. Our Dow Jones Industrial Average, you got green on the screen there, up about 130 points on the day, about 0.4% as we wait for these numbers to settle. We should point out on a weekly basis, the Dow Jones Industrial Average is fractionally lower on the week, only by about 0.1%. S&P going to close lower by about 0.3% on the day, similar 0.3% on the week, and the NASDAQ Composite is actually going to close down 0.6% on the day, and it's higher by about 0.6% on the week. Go figure. Russell 2000, that's your outperformer here on the day and on the week, up 0.2%.
Love those small caps. All right, let's talk about the semiconductor index because it's down about 1.6%. So, Shanali, I know you're going to get into the groups overall, but we definitely saw some underperformance in that group in today's trade.
Yeah, let's talk about underperformance because we're looking at the energy index down on the S&P more than anything else, more than 3.6% down on the day. You're followed by semis. Remember, that is a trade that you saw a lot of funds get back into. Semis down more than 1.6%. Tough way to end the week. You're having some green on the screen. You have autos, telecom services, food and beverage, retail, utilities up 1% or more on the day. But again, Monday is a holiday, so let's see what next week gets to bring.
That's a good point, right? We'll start a new week off. Let's get, though, to some of the specific gainers in today's session. We've talked about this a lot. The farm area, specifically ag equipment, and we're talking about Deere. It was the #1 gainer in the S&P 500, up about 7.5% in today's session. Really raised the group, some of the other players in that space. Top maker of ag machinery, analyst positive on the company after it reported first quarter results that beat expectations. The company also raising its forecast. So that's certainly a standout. DraftKings, did you guys talk to Jason Robbins?
We did talk to Jason Robbins.
Yeah, so interesting. That stock, man, on a tear this year and today, up 15%. It's up about 80% so far here in 2023.
You know what I thought was interesting about not only our conversation with them, but also the earnings, was the focus on costs and cost discipline more, if you will. And that seemed to be what really pleased a lot of folks.
All right, well, that's a really important thing, right, for a company, especially if you're getting into a market or outlook that maybe some might be concerned about. Company did, by the way, DraftKings reported fourth quarter revenue. It was better than expected, and they raised guidance for fiscal year 2023. So some outlook there. HubSpot, also an outperformer, up almost 12% in today's session. Software company gave a forecast for adjusted earnings much stronger than expected. And then you had the analysts weighing in. They were positive about the company's execution, my favorite corporate speak word. Also, the company's ability to drive growth in a tough macro environment. Maddie, what do you got?
Well, I've got our decliners on the day, and I guess I should mention the S&P 500 in this group posting its first 2-week losing streak since December 30th, meaning the first 2-week losing streak of this year so far. So I'm going to go into the biggest decliner in the S&P today. It's energy. Take a look at Devon Energy, down by about 4.2% on the day. The shale giant planning to spend more to get less in this coming year. One analyst on the earnings earlier this week said their spending looks hot, production is looking light, and that spending is hitting across the board in this sector. I want to also take a look at Apache, down by about 5% on the day. And then if we look at crude oil, also down by 2.8%, crude extending losses with those swelling U.S. inventories. Romaine.
All right, of course, we go back and to look at some of the big moves that we saw this week in the Treasury space here. A bit of a repricing when it comes to yields. We did see the yields on the 2-year actually slightly lower here on the day, but on a weekly basis, still up by about 10 basis points. You add that to 23 basis points last week, and I think it was 10 basis points the week before that here. And you see a pretty dramatic move coming off roughly about 4% to now 4.6. A 10-year yield had a similar move on the day and on the week, up at around 3.8% here. And the rest of the space here across the curve right now camped out in that 4% range, guys. And that really brings us to, I think, what we've seen in the swaps market, which is the repricing, of course, of Fed expectations, which across the board, I was running the work function, and I thought this was interesting. You take any contract around any meeting, so the March meeting, May meeting, June, et cetera, et cetera, et cetera, pricing now at 5% or more. That's a complete flip-flop from where we were just 3 or 4 weeks ago when all the pricing was at 5% or below.
Yeah, I know that's a significant change and a downgrade, right, when it comes to the odds of any kind of rate cuts, right? So what a switch in terms of the tone and sentiment here, Sonali.
You know, the thing about it, though, I don't think the market has fully absorbed what that means for things to be a little higher for longer, because the big question is for how much longer? When you have that trajectory in which the expectations have increased time after time, when does it end? That's the question.
Well, and the thing is, too, I mean, you think about what's the next catalyst for this market, up or down. I mean, we have a few earnings, which you've talked about, like Walmart, Home Depot. But also, there's a lot of economic data. You get the PMI data coming out. There's a big PCE report a week from today, that monthly number, where you'll get a read on spending, but also, of course, that deflator, the PCE deflator, which is, of course, the Fed's preferred gauge of inflation.
We got a lot of big news coming next week in terms of data. Personal consumption, GDP annualized quarter over quarter, initial jobless claims, continuing claims, and then we've got, of course, some of those consumer-driven earnings reports coming out from Walmart and Home Depot as well.
You know what else, Carol, is coming out this week? And I'm doing this just for you. I forgot to mention this earlier, but you know, all the Chinese tech companies. I think about you from time to time. Only 4 days a week. Okay. But all the big Chinese tech companies are reporting next week. So you're in Alibaba, Baidu, I think are kicking off. I'm curious to see what we hear out of them, given the big rally that we had to start the year, which has kind of petered out over the last 3 weeks.
Well, I was thinking about the story that was among the most read on the Bloomberg about a missing Chinese executive, right?
Yeah,
in the
investment.
Exactly. And I do wonder that's just a reminder that we still know that the Chinese market and the Chinese officials, it can continue to surprise us. And that certainly impacts the trade of those ADRs here in the United States, but also just generally global market sentiment.
Yeah, for a short week, we have some interesting U.S. information coming out next week, too. We're going to look at GDP revisions. We're going to look at existing home sales and existing, retail earnings. We have earnings ahead of us that, honestly, guys, this is a market in search of a bull case. Will they get it, is what I wonder.
How many times, Maddie, is James Bullard scheduled to speak next week?
Ooh, that's a good pop quiz for me, Romaine. What do we have
I don't know,
next week?
Romaine. How many times is Mr. Bullard going to speak?
I don't know. It was a rhetorical question. But thanks for playing along, Carol Masser.
You know what? JP Morgan reports earnings on April 14th.
There we go.
I already started to look at that. Hey, did you guys see the story?
I gotta put it on my calendar.
Did you guys see the story? The biggest earners may not be the smartest workers.
I did see that story. That was a good one.
What are you implying, Carol?
I'm not saying anything. Take it wherever you want to take it.
Interesting that you were singled out to end the week here. I did not see that story. I'll have to keep an eye on it here.
I'll share it with you.
Yeah. You know what else I'm also interested into? I know you guys probably don't care, but the bidding on Manchester United. You've been following that?
I care. I'm following that closely because, it's interesting. You're starting to see sovereign wealth really start to get into the European football game where, doesn't that give U.S. private equity a run for their money?
And I think this was supposed to be the deadline for the bids, and I think the latest Bloomberg report is that, the Qataris are, something around like $6 billion US bucks that they could be potentially bid.
Well, I think, the Middle East increasingly thinking about about maybe their PR image globally and moving increasingly into sports. I think it's a really interesting move, and especially if we continue to see it pick up some momentum.
It is, and you have to remember when you're looking at sovereign wealth and when you're looking at private equity across the globe, these are marquee private assets. And frankly, if you look at what's happening with the sales you're seeing in, American basketball or even American football, you are seeing people experience soaring valuations in sports. We were talking about ESPN and a potential relationship with DraftKings a little earlier. Let's see what the streaming wars do for the valuation of these companies.
Big money, business of sports.
Totally.
Romaine, before we go, I've got to ask you, favorite president?
I'm not going there. Favorite president. All of them. How
I really
about
want to know. Might ask in the commercial break.
There's a lot that aren't around. They're not going to be upset if you don't say their name.
Yeah.
All right, guys. Have a good long weekend. Really appreciate it. That's a wrap for our cross-platform coverage. Radio, TV, YouTube, and, of course, Bloomberg Originals. Beyond the Bell is what we call it. Have a good weekend, everybody. And we will see you, the team, back here on Tuesday.
That's right, the woman is smarter. 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 That's right, the woman is smarter.
just kind of loving the music. I'm in that Friday mode. Thank you, Paul Brennan, for that. We're going to talk a little bit about IT spending because Cisco Systems, their earnings, their forecast this week showed that corporate IT spending is definitely holding up. And our next guest company, the results that we got from them recently are doing the same. Insight Enterprises reporting last week with a fourth quarter adjusted EPS beat and upbeat 2023 adjusted EPS forecast. The results led some analysts to raise their price targets on the stock, which, is, by the way, is up around 30% year to date. Maddie, hitting an all-time high in today's trade. So we thought we would get something on the macro and micro.
Absolutely. And joining us now with that and more, Joyce Mullen, President and CEO of the $4.4 billion market cap IT services company, Insight Enterprises, via Zoom from Austin, Texas. Should mention, by the way, Joyce, a tech industry veteran, spent more than 2 decades at Dell, including serving as president of Dell's global channel embedded and edge solutions. Thank you, Joyce, so much for joining us today. Start us off by just giving us a recap. Tell us about the business, the last quarter, and what you're excited about looking ahead.
Yeah, sure. Thanks, Carol. Thanks, Madison. Great to be here with you. So we had a pretty good end to the year, and the year itself was awesome. So we're pretty happy with it. Record everything, and that's a good sort of launching platform for 2020.
All right, wait a minute. You had a record and you're just pretty happy with it?
It is pretty happy. We could do better.
Okay.
We could do better.
Okay, keep going.
All right, and you know, when you think about this, everybody is talking about the market and the spend, and certainly we are seeing some caution. So I don't want to be Pollyanna about it. There are definitely concerns out there. We're seeing customers shorten up or say lengthening their sales cycles. They're getting more approvals. We're seeing our customers cut down their projects to smaller bite-sized pieces to make sure they get the ROI in period, that kind of thing. But, Gartner says we'll see low single-digit growth in the market. Generally, the channel does better than that, and we do better than that. So we feel like in this $4 trillion market, mid-single-digit growth is a pretty good start. And since we're really focused on cloud, data, AI, edge, cyber, those areas are growing much, much faster than the average IT market. So we're feeling okay about the market
Joyce,
going forward in 2023.
Jump in here. Tell us a little bit about your customer base so that our audience has a better idea of kind of who you are really talking to, selling to, and working with on a regular basis.
Yeah, so we are a global company, but we really are our most dominant market is North America for sure. We serve about 80% of the Fortune 500 customers in the world. I would call the fat of the bat for our market kind of that corporate space, sort of think Fortune 300 mid-market. Those clients are generally underserved. They have really big IT budgets. And by the way, IT is complicated now. There's a lot of choices. So those clients need help, and they can't get kind of the labor and the skills that they need to make great technology choices, and that's where we come in.
Okay, can I ask you a quick aside question, Joyce, and then I promise we're going to get back to you. We're talking about IT, we're talking about AI. Give me your take on ChatGPT and Bing and the news we got on that this week. What are your thoughts?
Well, I still think there is enormous promise that goes along with the concept of ChatGPT and what it can do. I think what we learned this week is it's going to be tough, right? There's a lot of security concerns. There's a lot of ethical issues to deal with. We happened to be at Microsoft when Satya made that announcement last week, and we are very, very excited about the potential because we think this notion of leveraging natural language to drive instruction and get answers and move projects and products along is going to be really, really powerful. But it's obviously still pretty new, and there's some bugs, clearly.
All right, wait a minute. So you were at Microsoft. You had me at hello. So take us back. You were there and the announcement was happening. What was kind of front and center of the conversations? I don't know. What can you tell us?
Well, so we were there coincidentally. Microsoft is our biggest partner.
Right.
We are one of their top Azure partners, and we were there completely coincidentally, but it was a fun day to be there. So we weren't behind that curtain in the news conference.
Well, and it's funny, AI, not a new thing, right? And this is the thing that we're trying to remind everybody. AI has been around for a long time, but this takes it to a whole other level. How do you think that kind of propels growth for you guys going forward, maybe going the distance?
Well, I think it's right in our sweet spot. I mean, we've been working to your point on AI for a long, long time. We have lots of customers for whom we've built AI-based recommendation engines for next best action from a sales point of view, or predictability around patient load in Steward Healthcare, for example, so you can get better, you can staff more effectively and provide better patient care. So we've been doing these kinds of projects for a long time. I just think that means that we're going to have a lot to learn over the coming years about how to leverage this natural language capability and how to put that to work in our processes and in the solutions we build for our clients.
Tech just changes so quickly, as we all know by now, and it can be really hard to stay on top of. I wonder how you stay on top of it, Joyce, and what do you anticipate being the biggest tech change over the next decade?
Well, I think we've just been talking about what's likely to be the biggest tech change over the next decade. So that I think this notion of how do we leverage all of the data and material out there and actually turn that into really effective recommendations or production of work, production of code, production of papers, production of ideas. I think it's going to be really, really big. But we are we have been, as I said, we've been really focused on this notion of how do we help our clients make sense of all of the complexity in tech. We stay abreast of it in a couple different ways. First of all, we spend a lot of time with our clients, listening carefully to the problems that they're trying to solve, the outcomes that they're looking for in their businesses. And then we leverage our relationships with the best technology providers on the planet. And all of those technology providers are really strong, long-standing partnerships we've had for many, many years. We spend time with their R&D organizations. We spend time with their engineers. We spend time with them solutioning with the customer's interest in mind. So if you do that enough and effectively enough, and we also hire the best and brightest. We've got 5,500 technical experts on our team, and we're always looking to hire more. And that keeps us on our toes. And then if I'm really stuck, I talk to my kids because they always have something to teach me.
I love that.
Or they take it to TikTok and just make you laugh. Hey, Joyce,
Exactly.
you mentioned engineers, right? A company like yours, the backbone, right, is your technical expertise, your technical talent. How's that going in terms of the labor market? Are you still having to pay up to get workers in?
Well, you definitely have to pay up for certain skills. And what we're doing is we're trying to figure out how to do that. But in the meantime, we're also building really effective recruiting and development programs with university hires all over the world. We just acquired a company called Hanu, which is a Gartner Magic Quadrant Azure migration company.
That's
in
a
India.
what
What
does
I
that
know
mean?
exactly. I'm gonna say that, but they're really good at helping clients move to Azure.
Okay.
And you know, they have and one of the reasons we were so excited about them is because they've got a tried and true technical academy, which basically starts at the university, several universities around Delhi, and they build capability. So you not only have to buy it, but you got to build it. And we're going after both of those avenues.
All right, we're going to leave it on that note. Come back. I'd love to talk more with you again in the future. Joyce Mullen, she's President and Chief Executive Officer of Insight Enterprises, joining us via Zoom from Austin, Texas. As we mentioned, it's an IT services company, about a $4.5 billion market cap, and the stock hitting an all-time high in today's session, roughly up about 30% year to date. Midlife crisis, you ready to talk about it?
Oh my God, I was
You have years.
Ready. Carol, I'm closer than you might think.
No, you're not.
Don't let the skincare fool you.
All right, Bloomberg Pursuits, it is fooling me. Bloomberg Pursuits is all over this. I love this story. It's coming up next right here on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
$421 on Wall Street. We check the markets all day long on Bloomberg. The Dow higher today. S&P, NASDAQ both lower. S&P this week down 0.3%. S&P declining for a second week. The Dow down 0.1% on the week, lower for a third week in a row. But NASDAQ finished with an up week, picking up 0.6% on the week. Today, the indexes and averages mixed as dip buyers brushed off hawkish comments by Federal Reserve officials to keep weekly losses at a minimum. S&P down 11, drop there of 0.3%. The Dow up 129, higher by 0.4%, and NASDAQ was down 68, a drop of 0.6%. The 10-year yield 3.81% with a 2-year yield of 4.61%. Spot gold up $6 the ounce to $18.42, higher by 0.3%, while West Texas Intermediate crude oil was down 2.8%. WTI at $76.28 a barrel. So again, recapping, turned out to be a mixed Friday. S&P down 11, drop there of 0.3. 10-year yield 3.81%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Much appreciated, Charlie. You are listening to Bloomberg Business Week, watching us as well. It is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. There is still time to claim the Employee Retention Credit. Unlike the PPP, the ERC is not alone. Business owners can use the ERC to expand their company, pay off debts, or hire new talent. The money is there to help your business as you see fit. Learn more at getrefunds.com.
Okay, so Carol and I are very obsessed with the story we're about to talk about, so listen up, lean in a little bit. The midlife crisis. We've all been dreading it, hearing about it throughout our lives. Chris Rouser edited a fantastic piece about it, and we just knew that we had to talk about it.
All right, Chris, come on in on this. Tell us about, first of all, I want to know, like, were you guys sitting around in the newsroom or doing a Zoom call, and you're like, I'm turning 40, somebody's like turning 40, and they were having like a fit, or how did it come to be?
You know, it's not nice to guess a person's age, Carol. You know how it came to be. Normally around this time, we do How to Spend Your Bonus special.
Oh, okay.
You know, in good years, and this year bonuses are down on Wall Street 30%. We're going to a recession. Is not the look. We were like, okay, how do we address like sort of this moment in the year when you're looking ahead and you're thinking about money maybe? And we were like, midlife crisis issue, because I am actually a geriatric millennial, is the term for it, which means that I was born in 1981, and I recently turned 40. And I remember
Chris looks great, as you can all see on YouTube and on
Looks
Bloomberg
20
Originals.
years old.
Anyway, go ahead,
I remember when my mother turned 40, we biked to the supermarket and we got her a cake that said "Over the Hill" and it had like gravestones on it.
Oh my God, Chris, that's awful.
40, I'm
You
like,
wonder why your mom doesn't call now.
Oh my God, my mother, can you imagine? And you know, so millennials are just turning 40 now, and they have less money than previous generations, than Gen Z, than baby boomers. They're very busy. They're getting inundated by news saying you should change your jobs every 12 years. The Great Resignation had more quits in a given year than any other time. And there's all these fitness and self-care and wellness all around us. The self-care industry is $4 trillion globally, and yet millennials don't feel like they can take advantage of that. They feel like they have a wellness deficit because they don't have enough money to do the traditional midlife crisis and leave their job and leave their family or whatever, so they're reinterpreting it.
And one thing I love about your story, too, is that you talk about how the midlife crisis, or the story, I should say, was originally framed as a male-only thing. Women didn't necessarily have the luxury.
I had no idea. Like, I think of The Graduate, the movie.
Yes.
But anyway, go ahead.
Yeah, so it was a phrase that was coined by a paper in 1965 by a psychologist named Elliot Jacques called Death in the Midlife Crisis. And it was about kind of how, like, artists and creative types around the age 35 stopped feeling young and looking at their youth and started looking forward to death. And so it sort of became quickly this cultural thing.
She's laughing
where
over there.
people
She still has a few years to go. She can laugh.
In
Anyway.
their 30s and 40s, midlife, start reassessing their life. And, you know, at that time, the people who could afford to do that were white men. It wasn't really something that was afforded to women or people of color. And so the tropes of it are very very much like get a fast car, like get a toupee, get a mistress, stuff
Get
like
divorced,
that.
yeah.
Get divorced, and it's just not that way.
You know, women go through a midlife crisis too, but they were left in the dark, right? Like they were just like
They just weren't in the papers.
They just weren't in the papers.
So can you give me some advice? I'm a younger millennial. I'm millennial Gen Z cusp.
Okay.
So
That
teach
hurts.
me how to teach me. I have a birthday coming up that I'm not looking forward to. Okay, so teach
Should we
me
just kick
how.
her out now?
Yeah, you guys can totally kick me out. But what's the advice? How do I approach a midlife crisis someday?
Right. So, someone said it this way, like, my life feels very hungry, but my pockets are empty. And there is a desire to, like, okay, I want to make changes. And say you've got 10 plates spinning in the air. What you do is you don't drop any of the plates. You negotiate with the plates to make small changes in your life so that you can pick up a hobby that you've always wanted to pick up on the side. Or say, you don't leave your family and go start a life elsewhere, but you can, because of remote work, move your family elsewhere, which, as we know, lots of people are doing. You can move to Alaska or Maine and have a great quality of life and just slow everything down. Some people are, if you ever listen to Dan Savage, the love columnist, like, people are rethinking monogamy rather than getting a divorce and breaking up families.
Yeah.
We talked to a designer who said, I commonly make a snoring room, which is, sort of an excuse for people to sleep in 2 separate bedrooms as, once the kids leave or as they get older.
Reading so much about this.
So many couples are sleeping in separate bedrooms. It's really become a thing.
And we used to do that. Like that used to be pretty common.
To be the norm, yeah.
My grandparents did.
Yeah.
Like I had grandparents, and they loved each other, no doubt about it, but I think it was because of my grandparents snoring.
I mean, if
my grandfather snoring.
A lot of us, if we didn't live in New York apartments, would probably have snoring rooms
Listen.
a lot more frequently. And, instead of buying a super fast car, because the millennial generation is so fitness and wellness oriented, people are buying a nice bike, and they're getting out on the road, they're extending their lives, they're improving their wellness. And that's another thing. The midlife is so much longer because our lives are longer. And certainly people feel younger now, turning 40, than they did when our grandparents were turning 40. It's just a different thing. And so it doesn't have to be this thing that happens all at once. People are taking small changes over a period of time.
I thought about that too, Chris. Like, I don't know how you were, but growing up, I'm one of a lot of kids. And my parents, like, I think when they weren't even that old, but I'm like, God, you're old. Like, they seemed older, their appearance and just isn't that terrible?
No, our grandparents
sorry, Mom
too.
and Dad.
Yeah,
I
absolutely.
really hope that's changing. Is it?
I don't know. Is it? I think
It is, yes. According to the experts that we talk to, it is. People think of themselves as younger when they are in midlife, and that actually really affects the way that you go through the world, the way that you interact with people, and how you treat yourself.
Yeah, exactly. And I do feel like people, this whole idea, first of all, I find it disturbing, this whole idea that you've got generations that are coming off the financial crisis, coming off so many things, and don't have the money, or there's not the retirement package. Like, it's just a different financial picture.
Yeah, if you come of age during a time of crisis, you can have like up to a 10% just like standard deficit in your earning power as you get older, because people really make their biggest strides in earning on the scale of where they're going to be in their first 10 years of working. Wow. And so the wealth to income ratio for people in their late 30s and 40s is lower than previous generations. People on average have at least $20,000 less than they did in Gen X even.
Are people who are approaching the midlife crisis era maybe thinking, okay, instead of investing in a new house, I'm just going to invest in a retirement fund? Are we seeing any like big pushes for retirement?
That's not something that our experts actually said, and I think that because the wealth to income ratio is lower for this generation, I think people don't really see it as an option for themselves. Even if they're making money, they don't have as much saved or invested.
Yeah.
So I have to say that when I first went through the brief and I saw the "Don't let Grandpa get a new girlfriend," I thought that was part of the midlife crisis.
It is. It is.
Right? I mean, we just got a couple minutes left here. I mean, there's other stuff.
Yeah, so the rest of the pursuit section is all themed around midlife crisis.
Right?
So we've got a big story on the first electric Rolls Royce. So if you really do want to splurge on a car, this is a good one to do. It's amazing. It's like $500,000. Wow. We have a really interesting story by Lily Gurma about how Black women are leaving America. There are these groups that have conferences to sort of teach Black women to move to other places, how to work remotely, how to bring their families. Thousands of women are doing it in midlife, taking their kids It's a really interesting story. And then Max Chafkin, who we all love, did a review of the book that's out now about of Sumner Redstone and Shari Redstone, and telling the saga of sort of like the chaotic end of times with Viacom and CBS. And that is the one that's entitled "Don't Let Grandpa Get a New Girlfriend."
It's the real life Succession, which I'm obsessed
Really?
with and will not stop talking about ever. I can't wait for you to come in and tell us about the movie deal that Max is getting offered.
This, I want to go back to the black women, though. Why black women? Is it just a noticeable trend?
Well, first, a part of it is that like this idea of midlife reevaluation has spread to more people than just white men.
that's a
So
good
like
point.
people are feeling empowered to do this. And one woman at the end of the story says, we keep putting ourselves and our work and our tears into America to try to get, on the hopes that one day we're going to be treated better.
Yeah.
And like I'm tired of waiting around for that to come back. I can go elsewhere and have a much higher quality of life and live and work rather than work to live, or however that phrase goes.
Yeah, I know.
And
I have
one
a
woman,
brother who says it all the time.
yeah, one woman traveled around the world and was like, wow, this is just, it's so much better in other places.
Where are they going?
They're going to Portugal, they're going to Mexico, they're going to the Caribbean. A lot of people go to Mexico. Sometimes as far away as Thailand. Just places where the dollar goes further, because some of them say, the privilege of having, a little bit of money and being American erases the negative privilege of being a black person in these places.
Well, it's another great section. We had some fun with you, but some real serious stuff as well. What'd you do for your midlife crisis?
I'm having it right now. I don't know.
TBD?
Yeah. I'm trying to write a book. I think I'm going to write a book.
Oh, I love that.
Which is something you can kind of do on the side, carve out time for, make promises to yourself.
You should write a book. Check out the magazine, check out Pursuits. Chris Rouser, thank you as always. Have a good weekend. Editor of Bloomberg Pursuits. All right, right now, let's get back to world and national news. Off to Leslie Lotto. She's in our Bloomberg 1130 newsroom here in New York. Hey, Leslie.
Thank you so much. There's been another shooting, this time in Mississippi. 6 people dead, a suspect caught. The sheriff of Tate County confirmed the shooting deaths all happening in various areas of Arkabutla, that is. 5 former police officers who've been charged in the death of Tyree Nichols have pleaded not guilty. The judge in the case says he will preside over a fair process.
We understand that there may be some high emotions in this case, but we ask that you continue to be patient with us.
Those former police officers due back in court May 1st. A small fire at Terminal 1 at New York's JFK closed the airport terminal. It happened overnight Wednesday. The terminal still closed today after electrical problems continued. Flights canceled, delayed, shifted to other airports and terminals. Frustrated flyers starting their holiday weekend this way.
And I hope that they'll reimburse me for the hotel, the airfare, and my connection that I'm losing out on.
They're saying we won't get out until Sunday, possibly.
But the Port Authority says they will be able to partially open that terminal tomorrow after the power went out because of the fire. While the Biden administration promoted electric cars and batteries made in the USA, American auto firms remain committed to the huge Chinese market. Bloomberg's Irv Chapman reporting from Washington.
General Motors is looking forward to China's return to strong economic growth, Chief Executive Mary Barra said in a Bloomberg interview.
This is an important year for us in China, and we have a strong brand recognition from Cadillac and from Buick. We're focused on launching a portfolio of electric vehicles there that we think are going to be exactly what the consumer wants. Several of the products will be in both countries.
Chinese drivers, when prosperity returns, could be buying 30 million new cars a year, Barra.
I'm Leslie Lotto, Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:41 on Wall Street. I'm Charlie Pellet. We check the markets all day long at Bloomberg. Turned out to be a mixed Friday today. Stocks ending the week slightly lower on tough Fed speak. Now on the week, the S&P was down 0.3%, declining for a second week. The Dow this week down 0.1%, down for the third week in a row. NASDAQ, though, had a gain this week, up by about 0.6%. So here's where we ended today ahead of a long holiday weekend. We had the S&P down 11 points at 4,079, a drop of 0.3%. The Dow was up 129, up by about 0.4. NASDAQ down 68, a drop of 0.6%. 10-year yield 3.81%, with the 2-year yielding 4.61%. Spot gold up $5.40 the ounce to $18.41, up 0.3%. West Texas Intermediate crude dropped 2.8% today, 76.26 a barrel. Well, as for the overall market backdrop, Alan Zafran is co-CEO at IEQ Capital, and he was our guest today right here on Bloomberg Business Week.
The bulls are arguing that we're avoiding a recession, but if you're avoiding a recession, the economy is going to be strong, and if the economy is going to be strong, that means the Fed's going to keep rates up higher and longer, which in turn is going to push down economic activity, and it's going to push down valuations and earnings estimates.
AutoNation expects prices for new and used cars to decline this year as manufacturers crank up volumes and offer more incentives to price-sensitive buyers. AutoNation shares up today by 11.35%. Deere & Company out with earnings today. That stock rallied by 7.5%. Again, recapping here, mixed Friday. The Dow higher by 0.4%. S&P down 0.3. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie. So earlier this week, we were talking with Bloomberg's Alex Tanzi about Florida real estate, Carol, and how Florida is benefiting as folks move to the Sunshine State, especially the wealthy ones. And as a result, we're seeing the state juice its stature when it comes to having the most expensive places to live in the U.S.
Yeah, I think this was a little bit surprising. It's a great story. We knew we wanted to know more. So back with us is Danielle De La Vega, president of One Sotheby's International Realty, on Zoom from where else? Miami. Danielle, good to have you here with Maddie and myself. How are you?
How are you? Thank you so much for having me back. I'm excited to be here, and it's great to hear from you guys.
Well, it's good to have you here. I think the last time was kind of early in 2021. How was 2022 for you guys?
It was. 2022 was incredible. Towards the tail end of the year, we saw a little bit of a slowdown. I think people were just kind of waiting to see what happened with interest rates. But overall, 2022 was an incredible year.
Well, when you say incredible, give us some numbers. We're Bloomberg, so give me some perspective of the kind of growth you saw year over year. Are you back to pre-pandemic levels? What is it?
We're definitely not back to pre-pandemic levels. I mean, Florida, along all of the East Coast, has just been absolutely booming. I mean, the markets are just performing incredibly, whether it's the general resale market, the development, the new development market. So we were up 3% year over year in gross sales volume. Our revenue was also up, although we did see a little bit of a downturn. Like I said, towards the fourth quarter of last year, the first, second, and third quarter held us up. So it was a very, very good year.
So Daniel, I know that you're from Miami. I'm from Palm Beach County, so shout out to Florida here. But tell me a little bit about the obsession with Miami specifically. Where are you seeing that come from?
We're seeing that come from the same markets that we've really always seen it come from. We're seeing it come from the Northeast. We're seeing it now come from Massachusetts more than ever. As you know, they've implemented a new tax. California is now implementing a new tax. I think it's 4% over 5 million. I think it's 5.5%, something like that, over 10.
How quickly do you see the impact of those taxes, Daniel? Do you see it like immediately, or are customers already like pricing that in when they come to you?
No, we're already seeing that. So we're representing two incredible developments, one in Miami, one in Fort Lauderdale, ultra luxury, Pier 66 in Fort Lauderdale, the St. Regis residences in Brickell. And we are already seeing those feeder markets in both of those markets looking for information, actually buying units in these buildings. So we're definitely already seeing effects from the rise in taxes in these states. And, you know, you're seeing it amongst peers. It's just being circulated. So digital efforts, marketing efforts, everything for us is really being geared towards these markets.
You know, we mentioned, Daniel, a story done by our Alex Tanzi earlier this week, and it talked about the broad real estate boom lifting prices nationwide, but and overall adding an estimated $12 trillion in new U.S. housing wealth since the pandemic. But the Miami region seeing its number of million-dollar zip codes more than double from the end of 2019 through 2022. So you're seeing that front and center.
Yeah, we're seeing that. And I think, you know, 9 of those 12 were I think, Miami Beach. Maybe one of them was in Jupiter. We have offices there as well. And it's just, it's been incredible what we're seeing. I mean, new construction on Miami Beach is trading at $4,000 a square foot. Some of the condominium deals that are being done on the ocean are trading at north of $6,000 a square foot, $6,000 a square foot. So really big numbers. And I've got to tell you, I'm really proud of Florida as a whole. But Miami in particular, because we've been saying this for 20 plus years, that Miami is very undervalued. And I'm glad that the world is really seeing the value here. And of course, the no state income tax has been helping us tremendously, as it always has.
Yes.
But more than ever now.
So what's the demo looking like? Who's buying?
Northeasterners. We're still seeing plenty of Northeasterners buy. California. Mexico's been a big feeder market for us now, and they're buying ultra luxury stuff. I know that in several ultra luxury markets of ours, they are buying, and they're buying for really big numbers. So it's been the traditional markets. And look, we're not seeing the same velocity that we saw, you know, maybe during the pandemic. I guess you could say that the buying frenzy is somewhat over, but I think we are in a more stabilized market. And I think that that's what's helping the market continue to push forward, right? We know where interest rates are kind of going to lie. We don't think that it's going to continue to creep up in the manner that it has over the last 3 to 4 months, which is why we saw what we saw Q4. So the stability in the markets there, the interest rate markets there, has really helped. And it's just, it's continuing to be, you know, positive. At least in Florida, a positive outlook for the markets. And I think we're just going to continue to see the same demographic that we've seen, just not at that same pace, because again, the frenzy is somewhat over.
Right.
But again, balanced markets, stable markets are good markets.
Yeah, no doubt about it. Daniel, let me ask you though, a couple of things. How much does the rate environment really impact your buyer? Because I'm curious if a lot of them are also cash buyers.
Yeah, look, interest rates are temporary. And I think in the luxury, ultra luxury market, for the most part, everybody knows that. So in our development deals that are 3 to 5 years out, they know that they're going to be able to refi once they have to close, and they have the wherewithal to put the deposits that they need to as, you know, the construction timeline moves forward. So it's not really affecting the markets. Again, I think, you know, the ultra luxury, the luxury buyers understand that it's just timing. And I think for the most part, you're seeing the longer treasuries less than the shorter treasuries. I think that's an indication, right, that rates should come down. And look, I'm a big believer that they will come down.
They will eventually, right? But they definitely ticked higher this week. So there was a little bit of an adjustment. One other thing I wanted to ask you, the bonus environment this year for certainly the financial sector here out of New York, not so great. Did you see any impact of that?
You know what? That's okay. We already benefited from that tremendously. Like I said, we're dealing with a much more balanced market. We're not seeing the amount of sales that we did. But again, remember, we're working at a new price point, right? So pre-pandemic, 2019, a house that costs $1 million is now a $2 million house. And if it comes down a little bit, it's coming off that $2 million number. But if our transactions are down, our sales volume stays up, because we're now at a $1.8 million price point, not a $1 million price point. So I haven't, you know, we've seen it. Of course we've seen it, but.
Daniel, got 20 seconds left here. What's your most expensive listing right now?
Oh, wow.
Quickly.
Wow. So we just listed, well, it's not our most expensive, but in Vero Beach, $60 million, the most incredible home on the ocean, most expensive listing in Vero Beach.
In Vero Beach, fascinating.
Yeah, it's crazy for Vero, but it's incredible. The property's spectacular.
I can imagine. I bet there's some great closets in that one.
Oh, God, I would love it.
Danielle, be well. Have a great weekend. Danielle De La Vega, president of One Sotheby's International Realty, joining us via Zoom from Miami. Carol Massar, Madison Mills. You are listening and watching Bloomberg Business Week. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. 4:53 on Wall Street. Abbott Labs now facing a second probe into its role in a baby formula shortage last year that left millions of American families scrambling for vital nutrition products. JetBlue Airways is preparing for a possible lawsuit from the U.S. Justice Department seeking to block the merger with Spirit Airlines, while antitrust authorities have not yet revealed whether they plan to take action to prevent the deal. JetBlue CEO Robin Hayes says the company's legal team is ready to fight back if necessary. Hayes was on Bloomberg Television this morning, and he was making the case for the deal.
When JetBlue flies on the market, fares come down and service improves. We were the first airline to put live TV in the back of the seats. We've had free Wi-Fi for 10 years. We have the most legroom in coach. We don't overbook flights. And we offer low fares. No one else is doing all of that. And so with the merger with Spirit, we'll just better do that to a lot more places more quickly.
And today, JetBlue shares declined by 0.1%. The acquisition target, Spirit Airlines, up today by 1.2%. AMC Networks Executive Chairman James Dolan says he's open to a strategic transaction as his company's shares soared after posting fourth quarter results that beat Wall Street's expectations. Today, we had shares of AMC Networks, AMCX on the ticker, up by 32.3%. Those are some of the company stories we're following this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
I'm Madison Mills with Carol Masser here in New York. We've got more Business Week to come for you, but first up, let's get a check on the latest world and national news with Leslie Lotto in the Bloomberg 1130 newsroom in New York. Hey, Leslie.
Hey, hackers reportedly going after the FBI, according to Bloomberg's Nathan Hager.
According to a report from CNN, the Bureau has been working in recent days to contain a malicious incident on part of its network focused on child porn investigations. In a statement, the FBI says it is working to gain additional information, but it says the incident is isolated and contained. Sources say the attack involves the FBI's New York field office. That is one of the Bureau's biggest and highest profile offices. In Washington, I'm Nathan Hager, Bloomberg Radio.
Another former member of, backing up, the World Bank and International Monetary Fund plan to bring together financial leaders of the most impoverished nations and creditor countries that have lent them money, Bloomberg's Irv Chapman reports.
The world's poorest countries have to transfer $62 billion a year in loan payments, World Bank President David Malpass said in a Bloomberg interview.
Our list is long of maybe 40 countries that are under severe pressure. Prices are really high for food and for fertilizer, and now interest rates are much higher. It also creates pressure on the budgets of the various governments, including their budgets for climate finance.
Malpass said China was represented at a preliminary meeting and has to be persuaded to join other creditors in modifying repayment obligations. In Washington, Irv Chapman, Bloomberg Radio.
And now back to that other story. Another former member of Sam Bankman-Fried's inner circle says he's pleading guilty to U.S. criminal charges related to the alleged multi-year fraud at collapsed crypto exchange FTX. Nishad Singh's reportedly hammering out a deal with the Manhattan prosecution, preparing fraud charges against him. Agreement could involve cooperating with authorities and further isolating Bankman-Fried, who pleaded not guilty to an 8-count indictment. Global News 24 hours a day, powered by more than 2,700 journalists and analysts in over 100 countries. I'm Leslie Lotto, and this is Bloomberg.
All right, Leslie, thank you so much. Bloomberg Business Week, it is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. Your small to medium-sized business could qualify for up to $26,000 per employee if you kept them on payroll during the pandemic. It is simple and easy to see if you qualify. Learn more at getrefunds.com. Carol Masser, along with Madison Mills, here in our interactive broker studio on YouTube, also streaming on Bloomberg Originals, getting ready to wrap up the day, the week. Having said that, let's not forget that coming up 8 a.m. on Bloomberg Radio, you've got our weekend show, 2 hours of programming, along with our podcast, which you can catch on our podcast feed. But we've got some great conversations. I have to say, one that I think is so important right now, we're getting ready to mark 1 year year since the Russian invasion of Ukraine. That's the cover story of Bloomberg Business Week. It's a special double issue, but really talks about, as a